Investors. It's Raymond again with episode 4 of the financial statement analysis videos. This is episode 4, as I said, in the financial statement analysis series that we are doing for the German material sector. We just finished off the German energy companies, and now we're going to be analyzing the German materials companies. This is episode 4, as I just said. If you're new to my financial statement analysis videos, what we do is we look at the top 3 or most important 3 financial statements of relevant to an organization, that being number 1, the income statement, as you can see, number 2, the balance sheet, and number 3, the cash flow statement. The income statement and balance sheets are probably the 2 most sought after financial statements relevant to a company. I still believe that cash flow statement is one of the most important financial statements, simply because it's the last part of the story of a company's financial journey for the particular financial year. It shows what a company does with its cash, how it generates its cash, and how it spends its cash. So I definitely think it's probably the most important or most significant financial statement with regards to whether or not a company should invest. I definitely still believe the other 2 are very important, and financial decision as to whether a potential investor should invest in a company should be dependent on all 3. But I definitely place a lot of importance on the cash flow statement. But without further ado, let's get into the key ratios. The market cap, which is the overall price of the entire company, that being all of the divided up shares multiplied by the share price, the price for each individual stock, is 9.42 billion euros, which is really healthy. That's about 9.5 times the minimum what we require of 1 billion of the 1 billion units of a denominated currency. The revenue figure is as we're seeing quite frequently, is higher than the market cap. It's about 33% higher than the overall price of the company, which is quite strange. But then again, the revenue figure isn't the most important figure with regards to whether a company is a good investment. It's more so the profit for that particular year. So we're going to look at the profit as well as the yearly performance. So we're going to check how much the company has declined with regards to price over the year. It's declined by 29%. So that actually does, to an extent, explain the disparity in the market cap compared to the revenue figure compared to the market cap. Like I said before, it is about 33%, and the company declined in price by about 30%. So that kind of explains the disparity. Let's go to the dividend yield, which is the profits, the portion of profits that the company pays out to its shareholders, particularly common stock shareholders. I think with regards to preference shares, or preferred shares, however you want to say it, the company pays out probably a bit more, or maybe about the same, but it's more so guaranteed. So it's 5.79, which is really good. It's about I'm not too sure how much that would be as a percentage, but our minimum, the minimum requirement that I would say for a healthy dividend payout for a year is about 5%. So he's definitely doing very well on that front. How consistent it is in paying out those a dividend at that percentage per year, I'm not too sure, and not something I want to look at in this video. The PE ratio is 10.88, which is about it's about 10% higher than we would expect. The P ratio just shows the expensiveness of a stock at a particular period. It stands for the price, which is the overall price of the stock, which is 20 euros, divided by the earnings per share, which is the overall profit divided by the amount of shares outstanding. So per share, we earn about. So the price divided by the earnings per share is 10.88, which is really good. The earnings per share, which is kind of self-evident, is 1.86 euros, which is really good. That is about 10% for that particular year that is earned in net profit. The beta, which is the risk level of the company, is 1.21, which is 21% higher than the market average. Of course, this year's economic climate and as well as the the preceding years haven't been too great. But this year in particular, I believe the economic decline started in 2021. But this is it started in 2021. So the economic climate isn't too great. I believe we're slowly recovering, but it's very the recovery is very slow. But yeah, the risk level of the company, market volatility, the volatility of the stock is 1.21. Let's look at the first of the financial statements, being the income statement. We're going to check the most important figures, that being total revenue, total operating expense, operating income, net income before taxes, and everything else. So actually, we're going to focus more so on net income, which was 746 million euros for that particular year, which is 2021, which is really good actually. Diluted earnings per share, excluding extraordinary items, was 1.6 million euros. Net income after taxes was 769, as I said. Before taxes was 1.09 billion. So it paid quite a hefty amount of taxes actually. Operating income was 1.17 billion euros. Total operating expense was 13.78. Gross profit was 4.03. So it paid a lot in expenses, because the bottom line, that being in the income, is less than 25%. I think it's even less than 20% of the gross profit. So it paid quite a lot in expenses, which is probably something that the company needs to do a better job of managing, so they can produce more net profits for shareholders. That way we might see a stock price increase, because a lot more potential investors will be interested in investing in the stock. Anyway, we're going to get into the balance sheet, which is the next of our financial statements. So the balance sheet just shows the assets that the company controls or owns compared to the liabilities what the company owes, and then we get into the total equity, which is the assets plus the liabilities, and that is the net asset value of the company. So the total equity, the total current assets, which is all the assets that the company owned within the last 12 months, 6.61 billion euros. Total assets are 22 billion euros, and the current liabilities, as I said, with the current assets within the last 12 months, 3.55 billion euros. Total liabilities 13.05 billion euros, and the total equity is 8.97 billion euros. Compare that to the market cap of 14 billion euros. It's not doing too bad. It's just over 50% of the assets are just over 50% of the total liabilities. The total assets are just over 50% of the market price. So you would be paying a bit of a premium if you're buying the stock, but that can be explained by future earnings. Total equity is 8.97 billion euros, as I just said. And now we're going to get into the last of the financial statements, that being the cash flow statement. So the starting line is the bottom line of net income of the income statement, 1.09 billion euros for the 2019 year, 1.17 billion euros for the 2021 financial year. The cash flow statement is divided up into three parts: cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. So the operating activities is 1.82 billion euros for 2021 financial year. Investing activities is negative, almost always negative, because that's that aspect of the cash flow statement shows what the company spent part of its cash on with regards to investments. That means investing in projects, investing in things to boost the operating activity or boost the productivity of the company. Usually it's mostly spent on capital expenditures, like things like property, plant and equipment. Other investing cash flows aren't necessarily described, but if you go into a more in-depth financial statement or specifically cash flow statement, you'll probably see what exactly the company spent the other the other investing cash flow items on. Lastly, the cash flow from financing activity, that's financing from investors. It lost 856 million euros. Finance and cash flow items, dividends paid. A big chunk of the financing items. Sorry, a big chunk of the financing cash flow loss was due to dividends, which is really good. It actually is actually a verifiable and a valid loss of cash. The second largest loss of cash from financing activities is due to the retirement of debt. So it eradicated almost 300 million euros of debt, which is really good for shareholders as well as the company. Increases the health of the company because it has a lower level of liabilities. Net change in cash for 2021 was 107 million euros negative, but we can kind of validate that based on cash flow from financing activities. Apart from that, thank you guys for watching. I have to close the video now. I will see you in the next one. Peace.